On today's episode of the Cryptoverse, I've picked out another 5 crypto news stories for you today. No chart of the day today because it's not interesting. The 5 stories I've picked out include Coinbase launching support for a dollar-based stablecoin, Blockstack are launching support for token creation on their platform, Swift are moving to the Microsoft cloud in a defensive move against crypto, the US is working to remove Iran from the Swift system, and a hedge fund manager is selling his house for $16 million worth of Bitcoin. Timestamps for all of those are down in the video description if you wish to skip ahead. And remember, if you want to earn cryptocurrency rewards for watching the show without ads, all you have to do is head on over to the website, thecryptoverse.show, and then click on this big blue button that says Get Paid to Watch, and it'll explain exactly how that's possible. On to the first story. Today, Coinbase support the launch of the USDC stablecoin that was created in collaboration with Circle. So this comes directly from Coinbase's own blog, which is often a good source for Coinbase news. Coinbase and Circle announced the launch of USDC, a digital dollar. Now we know about the USDC, and if you are in one of the supported jurisdictions, you can start using the USDC at coinbase.com and in the Coinbase mobile apps, both on Android and Apple. So the Coinbase blog post here describes it as a, quote, fully collateralized by the US dollar, close quote, which is ironic since the US dollar itself is not really backed by anything. One problem many of you viewers have pointed out about these stablecoins is that they represent dollars in reserve. So they don't solve the fundamental problem or the reason why we hold Bitcoin. They're not scarce, are they, right? The purchasing power of a US dollar-based stablecoin like the USDC is at the mercy of the central bank, depending on how much currency the central bank decides to create. So for now, though, I think stablecoins are needed because even if they are in a situation where their purchasing power is going to erode over time due to inflation, A, it's at a very slow rate compared to, say, Bitcoin crashing from 20,000 to 6,000 in less than a year, and B, it's the same for EOS, Ethereum, and a bunch of other cryptocurrencies, right? The supply of EOS and Ethereum in particular is constantly inflating, just like the US dollar, although EOS and Ethereum are inflating at a faster rate. And also EOS and Ethereum are inflating at a predictable rate, at least, which you can't say that for the US dollar. Another problem I see with the USDC stablecoin specifically is that it's an Ethereum-based token. So in the Coinbase promo video here, it mentions micropayments being one of the uses for it, but that's not going to work if Ethereum transaction fees are even 5 cents or even 1 cent. I won't be happy to pay 5 cents worth of USDC to send 1 USDC to buy a song, for example. So Ethereum-based stablecoins not really ideal for microtransactions. But you know me, as soon as this shows up on my Coinbase account, the very first thing I'm going to do is do my own experiments with it. So I get a direct experience of how it all works. And from that, I'll notice certain nuances that I can't know without playing with it. So let me know in the comments below if your Coinbase account has now been enabled for the USDC and what you think to it. Meanwhile, the circulating supply of Tether continues to fall, no doubt as people switch to these new, more reputable stablecoins. We can verify this by going to CoinMarketCap, typing in USD, going to USDT, and now we see the circulating supply of the USDT is almost down to 2 billion, down from 2.1 just a couple of days ago. You can also refer to the chart. The blue line is the circulating supply of Tether. If you look at the 1 month chart, it continues to decline. It's taking a little bit of a minute to load here, but you can go and check that out for yourself anytime you wish. Moving on to the next story. Blockstack is about to do its annual hard fork and launch this feature that would allow you and me and anyone to create tokens and digital assets on their network. So this again comes directly from the project. Blockstack's own blog here, the launch of the Stacks Genesis block. Now, I remember studying Blockstack way back when the project was just an embryo, and I've been keeping an eye on it ever since. What's caused it to kind of bubble back up to my awareness again is George Glider, the Life After Google book that was launched recently. So I read that book, and George is a big proponent and a big fan of Blockstack, and it made me go back and look at the project. So I recently described Blockstack in the private patrons chat group as, quote, one of crypto's best kept secrets, close quote. So I don't know if you've heard of Blockstack or not, but I do honestly believe it's one of crypto's best kept secrets. Now, the reason for that is there's something unique about Blockstack in that it's got a very methodical way that they have structured the system, right? They've structured it into a true technology stack, hence the name, right? So Blockstack consists of these 4 layers. You can view them on the Blockstack website. But the 4 layers are, there's the blockchain at the bottom, which is the layer that provides the anchoring of truth. Then you have a layer on top of that, which is storage, decentralized storage and decentralized domain names. That sits on top of the blockchain. Then you have a layer on top of that, say level 3, where you have a browser and the developer tools on top of that. And then finally, only then do you have a apps layer on top of that on layer 4. So this is brilliant. It's a brilliant way of structuring it. And it's sort of a way that the Bitcoin community are trying to move Bitcoin towards, like with the Bitcoin blockchain being the base layer and then having second layer solutions like the Lightning Network or sidechains or this or that. In terms of the technology stack, Blockstack is way ahead of the game here. So go check it out for yourself. Next story, Swift have decided to move to the cloud and enlist in the services of Microsoft Azure. So this is reported by Blocks Live TV. You can watch this 13-minute report featuring Matty Greenspan, and it's worth watching this nice lady for 13 minutes, so you can go ahead and do that as well. But I guess Swift have finally realized that it's been caught napping by the cryptocurrency revolution, and it's decided that it's way overdue for modernization of their technology platform. Now, if you have a monopoly on a market, there's no incentive, right, to invest in research and development. There is an incentive instead to take your excess profits and pay yourself with them, right? I mean, what's the point in making your service better through research, development, and innovation when there's no one challenging you, right? When there are no competitors for your clients to switch to. If you have a so-so service, mediocre, if there's nothing superior, your clients have nowhere to go. So you can still make a giant amount of profit from a mediocre service. That's why monopolies are bad. Well, now there is Ripple on its way up. There is IBM entering the international payment space. There are dollar-based stablecoins that are starting to threaten Swift's business, and on and on and on. Imagine that. Imagine being able to take your stablecoin in the USDC or Gemini dollars or whatever. You can remit those internationally quite easily. Now, one thing Swift do have on their side is their 10,000 existing clients, and the switching cost from going from Swift to another technology system, that friction often is not worth it for these companies. So that will help Swift maintain its business in the short term. They will probably be able to keep those clients, but I doubt that the next wave of startups and entrepreneurs will want to use Swift, especially if we keep seeing stories like the one I have coming up next. So next story. The US is in negotiations with Swift to remove Iran from the international payment network. Is this a golden opportunity for cryptos and the blockchain? So this is exactly the headline coming from the article from CoinGape. So censoring someone from the Swift network, it works great in a world where Swift continues to hold a monopoly on international money transfers. And as we've just explored a moment ago, this is no longer the case. So cutting someone off from one system is just going to force them to consider one of the alternatives, even if that alternative is quote unquote inferior. Now, what the US needs to account for is where the people they sanction will go, and whether the people they continue to sanction will start trading with each other, essentially creating their own little economy. So the article already refers to this when they say about Iran and Russia already studying blockchain-based alternatives to Swift so they can trade with each other. Imagine if China does that, and so on. Because the superpowers around the world increasingly want to be free from the stranglehold the dollar has as the international trade currency. And that's what I've been saying why governments just don't want to even switch to a cryptocurrency that's controlled by another sovereign nation. It just repeats the same problem, right? The international trade should be done with a neutral currency, and Bitcoin is the ideal choice. But ultimately, you cannot accomplish anything by force. Temporarily you can, but it just won't hold, because all you're doing is creating an opposing force to the force you want to stop, right? That's not going to work because you always keep having to push back against that force. So the only way to ultimately solve the problem is not to push back against it, but to dissolve the source of the force that you want to get rid of. Next story. Hedge fund manager to accept Bitcoin payment for his $15.9 million mansion in Manhattan. So this was reported by btcmanager.com. Here it is. Bitcoin house for sale, Bitcoin accepted here. I'm not surprised, is my first response to this. This guy is a hedge fund manager. So he probably knows that the real estate market is way overvalued, and he probably knows that Bitcoin is way undervalued. So this is exactly what the smart investors do. They transfer value from assets when they're at their peak value and pour that value into assets that are at the bottom of their value. Then when real estate crashes and crypto moons, you pour the value back the other way. You pour it out of Bitcoin into real estate, and you keep repeating that process. And that's how you exponentially grow your wealth. Unfortunately, some other poor person is going to be on the other side of that transaction with their value going the other way. They're going to be surrendering $16 million worth of Bitcoin when it's at the bottom, and they're going to be trading it for an overvalued asset. But hey, knowledge is power and ignorance is not bliss. In a broader sense, and referring back to the Swift story from a moment ago, settling international real estate deals in Bitcoin does make a lot of sense, and I hope we see more and more and more of that, which this article actually refers to by quoting Barbara from Shark Tank, who says that she sees international real estate deals being used in Bitcoin as a great use case. But that is all I've got for you today. So if you liked this episode, please go ahead and hit that like button. If you disliked it, hit the dislike button. Please leave me a comment below with some feedback, and I'd very much appreciate it if you would get subscribed. And remember, if you want to earn crypto rewards for watching the show and get rid of adverts, all you have to do is head on over to the website, thecryptoverse.show, click on this blue button that says Get Paid to Watch, and it'll explain exactly how you can do that. Other than that, I'll be back with the next episode of the Cryptoverse. So until then, it's me, Chris Coney, saying bye for now.